And so at the beginning of 2023, we listed some properties out of my portfolio. And my partners were like freaking out when they weren't selling in 3 weeks. And I'm like, guys, that's okay.
Yeah, it's normal.
This is actually a healthier market.
Yeah, we might have to do a price reduction. Oh my goodness.
Right?
Hey everyone, welcome back to the Mark Loeffler Experience. For the first time ever, we have Danielle Chase on the show, and we're going to be talking about
interest rates and the market.
Yeah, we're going to talk about current market environment. So you guys aren't going to miss this one because Danielle is a seasoned investor and real estate coach, and she's been in the business now for a good 15, 20 years. She started when she was like 5 years old. So
I wish.
Yeah.
Don't we all wish?
Yeah. So yesterday, interest rates went up another quarter point. So that was July the 12th. So what are your thoughts on the current market?
Yeah, I think a lot of people are really scared about the current market. But as we've seen in 2022, the rates went up hard and fast. And people did not see that coming. That happened for the first time in history where it went up that much, that fast.
Yeah.
Look at, here we are midway through 2023. We're in Q3 now and we're surviving.
Is it Q3?
We're Q3.
You're a bearer of bad news. Like I wasn't even thinking about that, and now I'm going to think about that. Thanks.
You got to start getting ready to do your Q4 goals soon for next year. In Q4, you got to start planning next year. Yeah.
People do that. So you're seeing a lot of scare.
So no, well, last year we had that because nobody's ever been exposed to that, and it hurt a lot of people too. So like, let's not sugarcoat it. It sucked, and it hurt a lot of people.
Well, I'm seeing some of the fallout now where people are selling properties at losses, like less than they paid last year.
Yep.
And even with some renovations.
Yep, 100%. And what's happened though is, in my opinion, we're back in a healthier market.
Well, you look at like Niagara Falls and it's actually gearing to a seller or to a buyer's market.
Right. And so at the beginning of 2023, we listed some properties out of my portfolio. And my partners were like freaking out when they weren't selling in 3 weeks. And I'm like, guys, that's okay.
Yeah, it's normal.
This is actually a healthier market.
Yeah, we might have to do a price reduction. Oh my goodness.
Right? And so I think it's just looking at the mindset for the last better part of a decade. It's been very hot, our market here in Ontario and in hot markets across Canada and the US. So larger urban areas were really hot. I mean, you were putting in offers sight unseen.
Sight unseen against 25 people.
Right. Unconditional. And so like that also was never seen in history before.
Yeah.
And so things are just going back to where they were. But after a decade of doing this, people just got used to that and feel like it's the norm. But for us that have been in it longer, we know that's not the norm.
Yeah. I mean, I've been investing since the early 2000s. So I've seen higher interest rates. I think my first interest rate was like 7.15.
Right.
On a 5-year, I don't know.
And that was low. And that was low.
It was high because I was an investor.
Oh, okay.
Like I think you could have got like 6s or 5, high 5s on a 5-year fix back then. So what's your opinion on interest rates? So they obviously get another quarter point. They're forecasting at some point in the rest of the year, we get another quarter point. Do you think they've gone too far? Do you think they've not gone far enough?
I really don't want to get into politics because that's
it's not politics.
Have they gone too far? I think
but it's not politics. The Bank of Canada is non-political. Their only stated goal is to have inflation between 2 to 3%.
But it's the policies behind all of that that's very political, in my opinion.
So I mean, I disagree. I think the Bank of Canada is actually very non-political. I think some of the stuff that's being done outside of that, like the grocery rebate and stuff like that, that's very political and that's inflationary.
I think at the end of the day, I disagree with how they handled it. I think they should have started earlier.
100%.
And I think you're saying it's non-political, but I think there's some political influences in there. That's just my personal opinion. And so when we're looking at what they've done to go that hard, that fast, I don't think was healthy, but they had to make up for being late to the game.
I agree.
They should have started this early 2021.
Oh yeah, easy.
And maybe even before that.
Yeah.
So, but with COVID kind of put a wrench into things as well, right? So
because they were looking at job numbers.
That's right. That's right. So there was a lot of factors. And at the end of the day, I don't like to be judgmental because I'm not.
I think you do.
Well, we all have.
You're judging me right now.
How am I judging you?
Wait till the podcast, everybody. She judges me a lot.
You don't want to miss it.
Yeah.
But at the end of the day, they had to catch up. And being at subpar 2% interest rates is not a healthy space to be, especially if you end up going into a recession, because then there's no way for them to correct and try to save the market. So I think we're just going back into a healthy space so that they have room to correct.
Well, I just find this one aspect of this so interesting is that the rise in interest rates is causing more inflation.
I know.
So it's like that's causing more inflation, which is begetting more interest rate hike. Okay, if guys on BNN can see it on these other things, like why aren't these smart economists, why can they not see that and then say, okay, maybe there's other issues in play here that this isn't going to deal with, like this hot housing market in Ontario, because maybe there is literally just too much of a shortage of housing.
I don't know that the housing prices and the economy, they're related, but I don't know that it's the economy that's driving the housing market prices. Well, I think there's many other factors, and immigration being one of them. And so if they're trying to correct the housing market with the interest rates, I think that's the wrong position to take.
I agree.
Right?
And they've stated uncategorically that they don't care what happens in the housing market.
Right.
Up or down, they don't care. But at the end of the day, if even the Ontario housing market stays flat, then a greater portion of everybody's income is going to go towards paying for housing. Mm-hmm. And, that rise is inflationary.
Well, and the other thing is too that people don't discuss too much in our world, at least, is the rising rates is also hurting businesses.
Yep.
And putting jobs at risk.
Oh, yeah.
Because that interest rate is coming right off the extra debt service that's caused by the interest rate hikes. And all businesses carry debt. And so people don't realize that. And the extra interest rate hikes is shaving off of the business's bottom line. Those businesses, especially the large corps that are public, when they need to protect that bottom line because their valuation is directly connected to that bottom line, the biggest line item on their expense sheet is labor.
Labor and interest.
So they start cutting jobs.
Yep, that's their goal. Their goal is to drive it into a recession, mm-hmm. which they think is needed to get mm-hmm. inflation under control. Mm-hmm. And that's the goal.
And that's the scary part.
Yeah, and I think they've gone a little too high on it. Like, I thought it was good in May or June there, and I follow a number of economists, and everyone thinks we're getting another quarter point by the end of the year. And I don't think we're going to see it go down again for another 2 years.
So what happened? Well, here's the thing. What happens if they do succeed and they drive us into a recession? What happens?
Inflation should come down.
And they start driving down the interest rate.
Yeah. Well, so to get us out of a recession. Yeah.
Exactly. So they start driving the rates up to cause the recession, to just seize everything. Everything comes to a halt. It's like hitting the reset button. And this is what they've been trained to do.
Yeah.
Right? So now all of a sudden we get the big R. They're calling it the big R. And then we get the recession. Yeah.
And then you get the counterintuitive, like, oh, well, let's just give everyone $500. And then those people who are going to get $500 are just going to go spend the $500, which is inflationary.
Mm-hmm. It's important to realize that this is a season.
Yeah,
so
that's all it is. Yeah.
People are struggling with this. They're scared about this. 2022 was the worst that it's going to be. Now it's going to be incremental changes.
Yep.
You've survived 2022. Don't worry about the rest. Life goes on. It's a season. You just need to pivot, make a change. And because the economy changes, I mean, it's fluid. So we have to stay fluid with it.
100%. And policies change. And we just work with whatever's.
Work with what you got.
Yeah. I think we can leave it at that. Those are great insights. So you heard it here first. Danielle Chase on for Prime Minister.
God, no.
And make sure you like and subscribe and comment down below if you think Danielle would make a great Prime Minister. Thanks, everyone.